Hello and welcome to my channel. My name's Paul and this is pbTrader. In this video I'm going to talk about the opening range breakout, which is basically the 15-minute opening range, and I'm going to talk about the trade I took today and where I got out at 1.5R, and I'm going to talk exactly how and why I got out at the maximum height of today's stock. As you can see right at the very top, literally was my out exactly there. And I'm going to show you the footprint charts. I'm going to show you exactly why I took my trade there, and then I just watched the market just sell off. So it's a perfect entry and it's a perfect exit. So let's just first talk about the opening range and what is it, the opening range breakout. So first of all, I'm waiting for the market to open because as you can see here, that's where all the volume comes in, all the volume. So I'm not doing anything until the market opens. Then I'm waiting for the first 15 minutes to form. So I'm on the 5-minute chart and I'm looking for the first 15 minutes candle. So this is the low of the first 15 minutes, and that yellow line there is a high of the first 15 minutes. So it's the first 3 candles on the 5-minute chart. I also mark out the mid-range as well. I don't have an active strategy for the mid-range, but it's one I'm working on. So these are the lines I'm watching: the opening range high and the opening range low. So today in my pre-market video I said I'd love to see the opening range come down to the pre-market low and then put in a candle. That'll be with the general daily trend, and I would have entered there and the stop was there and I would have aimed for at least 2R. But I also said if we break above the opening range, then it's going to be a scalping play because it's going against the daily trend, but it's with the hourly trend. So let's just zoom out a bit. And you can tune into my videos every day live. I do a live pre-market video at 9 AM Eastern time or 2 PM here in the UK, where I go through my exact entries, exactly where I want to take the trade, where I want to exit the trade, and I go through a certain set of rules for the day, which lets me kind of set myself up, sets my mindset up, so I know if I'm going to be scalping or I'm going to be taking a trade and holding for a longer duration. So as you can see here, we put in this bit of an inverse head and shoulders pattern, and you can see we've been in a bit of an uptrend as well into the market, putting in lower highs, higher lows, higher lows. I know we pulled back a bit there, but generally it's a uptrend. We're in a bit of an hourly uptrend. Don't get me wrong, that we're in a daily downtrend at the moment, but we're seeing a bit of a reversal. On the hourly chart, I did also point out an inverse head and shoulders pattern, which you can see here quite clearly. That's the left shoulder, yesterday's low is the head, and the post-market, pre-market is the right shoulder. If you draw the trend line in, lo and behold, we broke it, and look where we are right now, we're retesting it. So technically we're coming into a bounce area right now, but because I was looking for the breakout and we're going with a trend, I had a few rules in place. I'm going to go through my opening range rules right now. So let's just zoom into the opening range trade. So the first thing I do, I wait for the first 15 minutes to open. So that's the first 3 candles on this 5-minute chart. I mark the bottom of the range, I mark the top of the range. I do also mark the mid-range, but I don't use that as more of a guide only. There is one rule that does take that into account, which I'll go into in a second. So once the first 3 candles are formed, and importantly we don't have news at 9:45 because we can see a lot of volatility, then I'm looking for the break of the opening range. And this top, so in this one here we had this top yellow line. You can see we broke the range on that candle there. So the most important rule on this opening range trade is volume. As you can see, as the price was pushing this range up, those first 3 candles, we had decline in volume. But it's really important that the breaking candle, the candle that breaks that opening range high or the opening range low, has more volume than the previous candle. So as you can see here, it had an increase of volume. So that ticked off the volume. My next rule is the trend. We just spoke about the hourly trend was in a bit of an uptrend. And if you look at the hourly EMA, we would have been sitting above the EMA line. So that would have been ticked as well. So that's the 2 rules. My second rule is this midline. So the opening range candle, what breaks that opening range high, cannot be lower than that midpoint. That's a too big risk to reward. So what I'm looking for is a candle just to break above that opening range there with a shorter, we don't want it down here or below that mid-range point because it's a lower probability trade then and you've got a bigger range. So once the range is established and we've had increasing volume and we're in the same trend as the hourly, then I'm looking for my entry. So my entry will be the top of that breaking candle. So this is the breaking candle. That's my entry there. My stop will always be the bottom. I have one tick below the bottom of that candle. That's my stop. And this is my risk to reward. So that's my 1R risk to reward. So minus 1R. So if I'm wrong and it stops me out, then that's me done. I don't take any more trades. Today I was targeting 1.5R, which was around about there, purely because it is an inside day. We're inside yesterday's daily range. So I think we have our opening range high. Yesterday's range high was that line there, the orange line. And then way below, we're not on this chart, is the opening range. I'm sorry, it was yesterday's low. So yesterday's high was up here, 66.90 area, and yesterday's low was way below that head and shoulders pattern we looked at earlier. That's the low. So I was well in the range. So today was only going to be a scalping day. So I was literally looking to take profit of 1R, 1.5R, totally out. However, on my so I trade 3 different accounts. My first account is my automatic trading bot on TradingView. This one here, you can see that there took the trade automatically, and it exited me at 1.5R, which is that green line. So that's literally using my rules. I don't trade that. It's all fully automatic. I just keep an eye on it every day, and I make sure it's enabled, and I make sure I'm logged in. And that netted 693. No, sorry, that's not it. Let's go to my trader rate. Wasn't far off that. That netted today. So it's a new account I set up today. $469 just that one trade. I took 5 contracts of MES long on the break of that candle, and it came out there, and that's done for the day. It won't trade anymore. So this is an automatic bot. I wrote it using Pine script, and I've tested it on my strategy tester, and today I finally decided to link it to a real live account. So that's linked to a TraderVate account. It's an eval account through Apex, and then eventually this will convert into a paid account, and hopefully it'll be quite profitable. So that's my trade on my TraderVate account. I also trade Top Step, and I look slightly different. I do look for the opening range, but I look for the breakout of a 15-minute, different strategy, and that worked perfectly today. And then finally I trade my Apex. At any one time I trade between 10 and 20 accounts on Apex. Some of them are paid accounts, some of them are eval accounts which I'm looking to convert. So in NinjaTrader, this is my Apex system. I copy from the sim account over to my Apex accounts. So basically I trade off the sim account, which you can see there, and then it copies it over to all of the Apex accounts. Let me just bring it across. So this is my copy trader here. So all my Apex accounts are listed in here. These are my evals, these ones I'm looking to pass, and so it copies it across. So it's a great system. NinjaTrader is brilliant, by the way, such a great system. So I'm using the 5-minute chart for my entry, and then once I'm in, I was entered here. I use my buy sell buttons, basically buy on the high of the next candle. So as we pulled back, I set my buy high there, set my loss, my stop there. It's all automatic. Don't need to think about it. It just trades it and puts my target in. My target is automatically set to 3R, which is about here. And obviously it's an inside day, so I was looking to scalp it. So normally I would try and hold for 3R, but then I saw something on the footprint charts, which I'm going to show you now. So something very significant was happening. So I was long coming into about 10:20, and I saw, first of all, I saw this. I saw lots of aggressive buying coming in. I saw stacked buying imbalances, which is great, exactly what you want to see. And then point of controls, these yellow blocks were going higher and higher. And then I saw this come in, and this is normally an anomaly. So I saw that is a point of controls at the tops of these bars, or near the top. So there's a little bit of weakness. We had some negative deltas came in. That's basically aggressive sellers coming in. But then what I saw next was what made me get out of my trade. So this time is at 10:17. You can go back to the 19th of November 2025. look at the 10-17 candles, and that's that top and tail candle we saw. So first of all, we had this anomaly. So we had a negative delta, so there's more aggressive selling, but we had a green candle. So normally I'm keeping an eye on that. The orange boxes kind of give me an early warning sign that something's not quite right. Look, the previous candle we had a 851 aggressive buyers, more aggressive buyers and sellers. Then we had more aggressive sellers in a green candle, so that's an anomaly. Next candle, we had 770 aggressive buyers, and then it was more neutral, so it's starting to slow down. We had the point of control in the same place, so that's where the most amount of volume was traded in those last two candles. Then we had 213 aggressive buyers come in, more aggressive buyers, and then we had this big red candle. First of all, there was no follow through, so that was the end of that uptrend. Secondly, I saw this. The point of control is right at the very top of that bar, literally right at the very top, with all of these buyers sitting there, but with no follow through. So you could say these were trapped buyers right there. So these buyers are trapped. That's 246 buyers sitting there, 102. 240, that's almost like $60-70 million worth of ES contracts. This is MES. Oh, this is ES we're looking at. So that is almost $70 million. That area there, and they're holding that. They're holding the high of today. And then I saw a negative delta. I saw some aggressive selling imbalances as well. No follow through. That's the key area with lots of buyers at the top. Then the next candle came along. So I was still long, by the way. I was still in my apex trade long. I took one off at 1R. I was looking around about. I took another one off at 1.5 hour, and I was trailing the 5-minute candles because it's a scalping day today for me. As soon as I saw two buyers sitting there, and I saw that green arrow, that means there was exhaustion from the buyers. There's no more buying pressure up there. I took my profits literally as we broke down that area there. So I was out at 67.06, and that's purely because of the point of control in the top corner, because that basic acts as resistance. So we know there's resistance there now because there's no more follow through. We know there's sellers sitting there because for every buyer there's a seller, and we had at least 350 contracts sold up there. So the buyers were not able to push through that area. And then we had some selling. We had some selling imbalances. We had these negative deltas, and then here's the kicker. In this one here, we had cumulative delta again at the very top of this candle. We had massive amounts of selling, aggressive sellers, 1,458. That is a lot of aggressive selling. And we had, look at this, totally stacked aggressive selling imbalances, which means there's 119 to 5, 212 to 1, 609 sellers to only 15 buyers. So here, if we wasn't out at that point, this should be your exit there. And then we had a cumulative delta divergence again. So what that is we had a green candle, a bottom tail candle. A lot of people say, oh, this is a pullback, I'm going to go long just here. But when you see 408 negative, more aggressive selling than buyers, you get a bit nervous, and I wouldn't be going long there. Again, that's a second warning. If you didn't get out here, and you didn't get out here, and you didn't get out when you saw this, this is your fourth warning, you know, and imbalance. The fourth warning to get out. And then there's a fifth warning as well, just on the next candle. We pulled back a little tiny bit. Notice we had a red candle on a aggressive green delta. So that's a positive, 186 aggressive buyers. And you would expect follow through. But no, what we've got is 8 orders on the buy side, 8 orders on the ask. So that means there's exhaustion there from buyers. The buyers are no longer interested in buying above that price level, even though we had a lot of aggressive buying coming in. And then we had a selling imbalance, another selling imbalance. We had buying imbalances here with no follow through. So this is your fifth warning to get out. Yeah, if you're still holding, if I went long up here, which I wouldn't do because I would have seen that and would have not been nowhere near long, then you've had all these warnings to get out. And if you still haven't got out there and you've got these warnings here, look at all this imbalances, cumulative delta divergences, plus 81. So there's more aggressive buying in this candle than we're selling. and then we had more aggressive selling in this candle than buyers, and we had a green candle. And look at this, we had a treble aligned point of control. So we've got, this is where the most amount of volume was transacted. You can say we had quite a lot of volume there as well, so that's the region. So we know that area is very full of buyers and sellers. We had a big push up, came back in, we rejected it, and then we pushed through a little tiny bit. Let's just move on. We had a negative divergence again, so we had a negative delta on a green candle. So that's an anomaly. Again, I wouldn't be going long here. If I was looking for a bounce, this would scare me off by a mile. And so that is many reasons to be considering exiting your long if you are currently long. If you're looking for a short, then that is many reasons to find a short. If you're looking for a short, this is not one I would do, it's not part of my strategy, unless it's an hourly level, which we're going to look at in a minute. You put your stop there, you put your entry below there, or maybe below the pivot, waiting for it to break down, and then as it pulls back, it comes back in. So that's the double top we're looking for, and then that's your entry. Pull back. Notice lack of buy-ins, buyers there. Notice lack of buyers there as well. Last time at that price level, we had 24, then we had 70. You can see it's declining. So there's a few strategies you can use from this as well. However, my exit was pretty much there on the break of that next candle. As soon as I saw point of control right at the very top with lack of follow through, and this is the kicker now, I'm going to go back to my trading view. If you follow me on all my pre-market videos, I do a pre-market video every single day, and there was a key area I was watching today for a potential rejection or a target if I was long. That is 6700 psychological number. You can see these yellow lines drawn here as well. I've got two dashed yellow lines, so that's basically a daily level and an hourly level next to each other. So that to me is more important than seeing a single yellow line, apart from that one's on a point of control. And we've also got this fair value gap up there. We've tapped into it during pre-market hours or post-market on Friday last week, or Monday I think that was, but we've not tapped into it during regular market hours. And look at that, we tapped into that fair value gap and we rejected. So that is the other reason I got out. I knew we were coming up to a psychological number. We were actually above 6700. I knew we had a fair value gap, which was technically untapped, and we had this double dashed area, which is the hourly and the level, and it's the hourly and the daily levels I was watching as well. So that should be more than enough reasons to find an exit on this trade. You know, if you're still holding and you're down here, then you've had all the warnings. Literally, was it 1, 2, 3, 4, 5, 6, the hourly 11, 7 reasons to get out of that trade, or 7 reasons to get into the trade, or equally both ways. So, and then look how we responded. Let me just zoom out. So that was the high of today up here, the point of control right at the very high. So basically, if we see point of control is at the high and it's on a red candle, that is basically absorption there, and there's no more, especially when there's no more follow through. We know we're going to see a bit of a rejection, and that's why I got out. And look at that, it just sold off and sold off and sold off and sold off and sold off. And here we are right now, coming into real time. Never ever looked back. Where's our real time? Was it midday? Just gone midday. And here we are, still selling off. And that was the perfect entry for an ORB trade, and that was the perfect exit for the ORB long. So it wasn't my algo, this is me trading it with my own eyes, and as you saw earlier, I got out at the very top of today, right up there, and we've sold off ever since. So I appreciate you watching this video. If you're looking for footprint charts, then I will be holding a Black Friday sale very soon. Keep an eye on my Discord. There's a link in the description to the free Discord, and there's also a premium service for this Discord as well, where I go through all my trades every day. I put all of my order flow education in there as well, my footprint education in the premium. But the free one, I've got a general chat, and I generally do pop in there with some levels sometimes. If you're looking for footprint charts, then I sell these. These are you don't need any subscriptions with NinjaTrader. NinjaTrader is a free platform. You can just use your data provider, whatever you get, whether you've got Rhythmic or Trader 8, and these will just use the ticks. It uses all the ticks tick data, so it doesn't need any level 2 or anything like that for you to subscribe. So there will be a Black Friday sale very soon on these footprint charts. There's also a Black Friday sale on my Discord premium server as well for premium members. If you want to know more about ORBs, then also look in the description for the link to my Amazon book. I've got it on Amazon for sale right now. You can also download it. You can get the hard copy, a physical book copy from Amazon, but I've also got it on my website. At the moment, it's free, but it will only be free for a few more weeks, and then it will be back to the paid. Is it $9.99? And that ORB guide basically goes through what is a trending day, what is a ranging day, what is an inside day, what to take my trades, where to take them, and rules I put in place. And it's basically what my algo trades. I've made a few tweaks to my ORB over the last few weeks and over the last few months even, and so I'll be updating the guide soon with a brand new version. Okay, that's pretty much it. I appreciate you watching this video. Don't forget to smash that like button, hit the subscribe button, and all your support is much appreciated. I appreciate every one of you watching, and I will speak to you soon. Thank you for watching.